Hey, everybody. It is Chuck Barone. Wednesday, Powell Day, September 18th, 2024. And what a day it was today, right, guys? I mean, these markets whipsawing up and down. I got to say, Powell, he fooled me. I got to admit, I have my doubts about this guy, but boom, they're not playing, man. Half a point cut. Everybody kind of, wow, the markets were pricing that in, but it didn't really seem like they were prepared for the reality of it. Now, the funny thing, what do they say on Wall Street? Buy the rumor, sell the news. So maybe that's what we're a victim of today, right? Everybody was anticipating these cuts, pumping everything up. Now the cuts come, sell the news, boom, everything goes upside down. It's crazy, man. But anyway, before I get rolling, let me take a half a second. As always, welcome everybody to the show. As always, thank everybody for their support. Man, you guys appreciate everybody here. I appreciate everybody on the chat. Nice to see Smoke back today. There's Spam. We got Donna on today. We got the usual, David Molly and JP and Wolf and some of the rest. The good group on the chat. They keep things amusing. I still haven't quite mastered the looking at the camera while reading this at the same time thing. I guess I could put the camera on this, but anyway, let's talk about today. So we knew today was the day, man. Today is a big change, guys. This is boom. First time in 4 years they're cutting rates. Changes the entire cycle. Everything changes now. Because we've been through and through a hiking policy. Then we've been through a long time holding those rates elevated. Now we're starting to move the other way. And the Fed, not playing around, came out, boom, half point cut, man. Let's get it done. Let's let the world know we're serious. Okay, man, everybody sit up and take notice. They caught up with the Europeans pretty quick, didn't they? So the markets today reacted kind of weird, though. Markets moving I figured markets would cheer a half point cut. Didn't. Stock markets fall. Dow Jones down 103 points, 41,503. The NASDAQ down 54 points, 17,573. The S&P down 16 points, 5618. So across the board, stocks down today. Surprising. Bonds selling off. Bond market down. Yields rising. The 10-year up 4 basis points, 3.69%. The 2-year also up 4 basis points, 3.63%. So they're still got the yield curve still normal, although not a very big one. And no steep yield curve. It's kind of, flat looking, but at least it's the right side up, right? The dollar today, surprisingly, the dollar gains today, up 18 basis points on the index, 101.12. Again, if I was betting on the dollar today, I would have had to bet the dollar was going down. I would have had to say, well, they're going to, especially in the face of the half a point cut. I don't really know. I guess the dollar overpriced that in. So the dollar rallies up. And same time, dollar rallies up, precious metals down, right? Gold down $17.80 today. Still holding a good, strong number, though. $2,553.20 for an ounce of gold. Silver falls 57 cents last time I looked, sitting at $30.07 per ounce. Even though I don't like the fact that silver went down today, again, held the $30 number. Important stuff, guys. Got to build that consolidation above 30 to hold it. Need to do that. And it looks like silver is on its way to starting that. Oil today, down. Oil falls $1.21 per barrel, $69.98 for a barrel of West Texas Intermediate. Pretty much right where we expect it to be, between 70 and 75. 69.98 is pretty close to 70. Bitcoin today, not much happening in Bitcoin, up just $40, 59,879. So Bitcoin looks like it's kind of getting set to take another run at 60 grand. That's the number there, the resistance number. It's sitting right underneath it. Let's see what Bitcoin can do. Hopefully it'll break above, just like silver did, and hold it for a little while. All right, let's talk about Powell. I got to admit, I did not watch his presser, but I think that Powell really signaled the market that cuts are here and going to happen quickly. So they cut a half a point today. And I got to say, Powell surprised me, man. I had my doubts about any cuts at all. You guys have heard me say it a million times about rate cuts before a tight election like this. Well, here we have a big rate cut instead. So what we're going to get is Trump, I'm sure. I haven't read anything yet, but Trump will be out complaining about this, saying how this is an unfair advantage to the Democrats. But what do you guys think about this? I mean, I have to rethink some stuff now. But what do you guys think? Do you think they're trying to get in front of a recession we got coming? Powell said no. He said that the economy is looking okay, and there are no suggestions at this point of a downturn. If we are heading toward a recession, do you think a half a point's going to prevent it? I don't. What do you think happens at the next Federal Open Market Committee meeting? Think they're going to continue cuts? I got to say, a little bit of doubt. Now, the Fed dot plot, which kind of maps out what the future might look like for the Fed, what, kind of gives a consensus on where all these Fed governors are at. Well, the Fed dot plot signals 2 more rate cuts this year, both quarter point cuts. That'll bring the overnight rate, which is the Fed funds rate, down to around 4.4%. So they're planning on chopping up another half a point of rate cuts by the end of this year. So we'll be down 1 full point. So we were at like 5.35, 5.4, right in there. By the end of the year, they want to be at 4.4. That's a pretty aggressive move in 3 meetings. Fed data also, this dot plot shows that Fed officials see rate cuts hitting another full point next year. 4 cuts, 4 quarter point cuts, bringing down the Fed funds rate to 3.4%, which I guess is where they believe it's neutral. No, because they're even expecting two cuts again the following year. They're expecting inflation this year to finish at 2.2%. They're expecting 2.0 next year. We'll see about that, guys. So these guys are obviously pretty confident that lowering rates like this is not going to affect inflation. Now, if the economy we're not in recession, if we're not, and we cut rates a half, and we go ahead by the end of this year, heading into the holidays, cut rates again a couple more times, and the market starts blasting off, everything starts rocking and rolling, big Christmas season. What do you think that does to inflation? You think the output of goods is going to keep up with the surge in activity? It's really, 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 really interesting. Now we're going to see if the Fed is right about this. Now I got to say, a little deja vu settling in here for me, because I remember the 70s and 80s, even though I was a very young kid. I was in my middle teens, late teens, heading toward 20. So I wasn't really paying attention to finance as much at that age as I did into my 20s and onward. But I do remember the Fed chair declaring victory, which Powell went out of his way today to say the Fed is not doing. Cutting rates when they were afraid a recession was coming, and inflation came flying back up. I mean, it was like, I don't really think the economic activity levels in the 70s were so much different. And then, the 70s felt like a big bummer, like this decade has felt. The great thing about the 70s, of course, was the music. But The 70s was a dark decade, man. It was really weird, We've had a lot of similarities with the 70s in this decade, right? The 70s ended the Vietnam War, and we went home, limping home after a terrible withdrawal there. Just recently, the same thing in Afghanistan. Terrible withdrawal, went limping home, looking like shit. Now, the funny thing was the Vietnam experience scared us. We weren't in any wars for a long, long, long time after that. Reagan kind of changed it around just a little. Bush too, they did their little excursions, Grenada, Panama, right? Clinton with his Bosnia. Then came 9/11. And we've basically been, I guess not so much recently, but we've been at war pretty much since that, 23 years. So this is really going to be interesting. We know we have some serious issues. We got defense, we got Medicaid, Medicare, we got Social Security, and now added to the big three here, right? Now you can add interest on debt, which is going to be more than Medicare and more than defense. How is it possible to keep all this up without it being inflationary? I got to see him pull it up. I got to say, though, St. Jerome, I call him St. Jerome because, to be a saint in the Catholic religion, you have to have performed a miracle. I think what Powell's done so far is a friggin' miracle, man. I mean, when you had inflation to 9% and you had to spike rates like that, you don't get a recession out of it. You might have a chance to pull off the mythical soft landing. Now, again, I have my doubts, but you got to say it like you see it, guys, right? I mean, the guy's done a masterful job here. He really has. Now, Powell said that today was an interesting point he made. He said the Fed is not cutting a half a point today to try to catch up to the economy. He said they're cutting the half a point to stay ahead. So he's basically implying they're not seeing data right now that would imply a cut this size. They're trying to get ahead of that so they don't see that data down the road. Really fascinating day with Powell today. Really fascinating stuff. All right, moving on from that today. Now, the interesting thing with Powell and all the rest of this. Now the conversation changes around, right? So now the conversation changes from how much in September to how much this year, how much total, what's their new, terminal rate, the neutral rate where it doesn't affect the economy plus or minus. I got to see how they pull all this out, guys. Now, I got to admit, they're a lot smarter than I am. So okay, fair enough. But I don't know, man. There's a lot of storm clouds out there. And this whole idea of all this stuff going perfectly just doesn't completely jive with what I'm seeing in the world. Now, it doesn't mean I'm right. It certainly doesn't. I was wrong about this cut today. Like I was pretty sure that they were not going to cut rates into this election. We know how things are in this election, man. They're tooth and nail and they're neck and neck, man. It's like, this election is going to be razor, razor, razor thin, whoever wins. It looks like it's going to come down to basically two states, Pennsylvania and Nevada. And that is really going to put the pressure on, man, So Powell doing this today, like I said, he did what he had to do, and I give him props for it. But I got to say, I did not believe he was going to. Now let's talk about Fed Part 2, the part that no one's really talking about because the whole entire focus has been on cuts, rates, over Fed funds rate. Let's talk about this. The Federal Reserve losing their asses on their bond portfolio. Remember just a short time ago, just a few years ago, the Fed was making so much money from this bond portfolio they bought through these extraordinary measures. They were actually able to contribute to the Treasury every year. That's all gone away now, guys. So far this year, the losses are staggering. And what's interesting about that is the way the rules are set up at the Fed. Fed's going to have to earn back everything they lost this year before they can now go into surplus and start giving the Treasury money again. So really, what the Fed did help keep deficit down, help a lot of ways. Now it's going the opposite way, and taxpayers are going to have to pay. Jesus, man, what else could go wrong? So right now, Fed banks, the regionals, are there's 12 of those Fed banks around the country losing their asses billions of dollars. The Fed used to contribute every single year to the Treasury, like I just said. Listen to this. In 2021, the Fed was able to contribute $109 billion to the Treasury. $109 billion. Then came QT, where how their bond portfolio, what they were doing was when the bonds matured, they were taking that money and rebuying 100% of it. Now they've been reducing that. They call that QT, basically pulling money out of circulation. The first meaningful drop in M2, the money supply, since the friggin' 30s, right? Meaningful meaning 2% or more. So big contributions before QT. Then came 2022. Now QT had already been they were doing it, but it wasn't really in full effect yet. So they were still able to contribute $76 billion in 2022. By 2023, QT was they were feeling it now, right? So last year, they were able to contribute just $670 million. Now, we know the size of their multi-trillion-dollar bond portfolio. That was the measly return they got on it, guys. And this year, so far, they have losses between the 12 banks, accumulated losses of $195 billion. Now, again, that $195 billion is going to have to get made back before they can go back into surplus and give the Treasury money. The reason they're losing all this money, of course, is because they raised interest rates on their own bond portfolio. Right? They had all these bonds at old-time bond rates, super low rates. As they started raising rates, those bonds came down in value dramatically. Plus the fact they're not renewing a lot of those bonds at higher today's rates, right? And that's how you got a recipe to go from $109 billion in the plus to $195 billion in the negative. That's a gigantic $300 billion difference on that very same portfolio, guys. No one talking about that. No one talking about $36 trillion the government owes. No one talking about $1 trillion a year in interest payments. No one talking about this stuff. What are they talking about? Tax cuts, and we're going to do this. We're going to give $50,000 to people here. We're going to give $10,000 here, 20. Either we're going to give away money to poor people in terms of real money, or they're going to let rich people keep a lot more of their money in tax cuts. Of course, nothing for us, the middle class. We're going to get screwed either way. But crazy, crazy, crazy world, guys. I mean, I guess the Federal Reserve cutting rates helps them, helps their own portfolio. I don't know if they have that kind of self-interest, obviously, since they managed to turn a gigantic gain into a gigantic loss. But, man. So tomorrow, jobless claims and a whole bunch of slew of other data, plus more data we're going to get today as we were, waiting on this interest rate cut thing, which took all the oxygen out of everything. So tomorrow will be a massive data day to go over with you guys. Friday we'll wrap up another crazy ass week. By then we'll really have some digestion on these rate cuts and know what the future's looking a little bit more like. That's it for the day, guys. Love every single one of you. Peace to the guys on the chat. Thanks again, guys, for being here every day, man. I really appreciate it. Be back tomorrow to bring you guys your news you need. Don't forget to hit the thumbs up on the way out, guys. It helps us out, man. We need your help. Thumbs up on the way out. Until tomorrow, everybody. Take care. Thanks.